Let's talk about Alibaba's stock, especially since we recently had a report. We will definitely review the financial metrics. I will also touch on volatility, what's happening here. We'll analyze the volatility smile, as well as the support and resistance levels. We'll definitely look at what level Alibaba needs to break through. I'll tell you right away, it's $85, and once that happens, we could see incredible growth. But we'll discuss that a bit later. Now, let's start from the beginning. As we can see, Alibaba's stock has been in consolidation for about 2 years and hasn't moved anywhere. Yes, we occasionally rise to $100, and sometimes we fall to $60, but the average price is $85. Even though the reports are getting better and better, the stock hasn't gone anywhere yet. I'd like to remind you that the all-time high was $317, and now we've dropped by 73%. Recently, we had a report. Let's take a look at what happened. I'll try to give a brief summary. $33,470 million, which represents a 4% increase year over year. Basic earnings per share attributable to ordinary shareholders were $0.17. $3,653 million, a growth of 6% year over year. To enhance user experience and stabilize market share, Alibaba Group implemented several strategies, user-friendly promotion mechanisms. They focused on creating promotions that are easy for users to understand and engage with, particularly during events like the 6.18 Shopping Festival, which contributed to strong online GMV growth. Increasing 88 VIP membership, the company aimed to enlarge its pool of premium shoppers by increasing the subscription of 88 VIP membership, which offers enhanced benefits and services to members, thereby improving their purchase willingness. Focus on quality products and services. Alibaba emphasized offering quality products at attractive prices, which helped in stabilizing the market share of Taobao and Tmall. Investment in technology and customer experience. Continuous investment in technology, particularly in AI and cloud services, was made to improve customer experience and maintain market leadership. These strategies collectively contributed to returning the business to a growth trajectory while enhancing user satisfaction. Now, let's analyze the volatility, what's happening here. As we can see, the historical and implied volatility are at the same level. The gray line represents historical volatility, and the white line is implied volatility. In fact, this is a good sign because volatility tends to return to its historical values, as we see here. But on the other hand, it's not so good because there's no clear opportunity to profit from trading. Let me quickly show you how that can be done. We assume that volatility will increase by 15%, and artificial intelligence can help us develop some strategies. Let's look at one of these strategies. We are advised to sell one call option with a strike of $82.50 and buy two call options with a strike of $85. This is not a very complex strategy, but any strategy needs to be managed, including this one. I'm just showing you what can be done. I'm not recommending you open such strategies. Now, let's take a look at the volatility smile, what's happening here. As we can see, for the closer expiration dates, the volatility smile points both to a decrease in the stock price and an increase, that is, towards put options and call options. Investors and traders are factoring in both growth and decline in the medium term. But if we look at the longer expiration dates, the smile shifts more towards the put options, indicating a downward bias. This is because investors and traders are buying put options for hedging purposes, which makes put options generally more expensive than call options. Now let's examine the support and resistance levels. The most important thing happening here is that we can see a significant resistance level concentrated around $85 for call options. This is an enormous barrier, and so far Alibaba hasn't even reached it. However, I expect that in the coming weeks we will touch this level, and in my opinion, the stock will likely pause here for a while. I believe that breaking through such a level won't be easy. Such levels are usually only broken on high volumes, perhaps due to a strong earnings report or some other significant news. Without these factors, breaking through this level will be very difficult. The next resistance level is at $90, which is also quite significant. After breaking through $85, we could quickly and sharply rise to $90, which is a 6% increase. This will be a critical point because the last time we touched $90, we couldn't break through. The same scenario may play out this time. Either we break through and continue to rise towards $100, $120, or we bounce off and fall back to $70, continuing the consolidation phase. Therefore, it's essential to monitor these levels closely. Again, I remind you that the derivatives and options markets are crucial, and we must pay close attention to them. Regarding put options, the situation is much calmer. There's minimal volume with some concentration around $83 and $80, but these volumes are relatively small. Now, let's transition smoothly to the market forecast. Again, I'm showing you the market forecast, which includes all available information and predictions. As we can see, the market predicts that the price will be between $80 and $85 by mid-September, staying within this range. The time frame is quite short here. Let's look at the market forecast for the end of the year. The forecast shows a price range of $78–82, indicating a slight decline. The market does not seem to believe that the stock will rise significantly. Now, let's consider a longer-term forecast around mid-2025. The market predicts a price range of $75–78, again indicating a slight decline. However, looking too far ahead may not be very useful, as such long-term market forecasts are generally less accurate. So where do we stand at the moment? We have a very strong resistance level that will be challenging to break through. If we do manage to break it, the stock could potentially rise to $105–120. This scenario is possible. But again, the market isn't really pricing this in yet. Let's also take a look at the 3D volatility chart. This chart consolidates all the information about options and volatility. Professionals often use this graph. I also want to remind everyone that I can't predict price movements. I don't know where the stock will go. My main task is proper position management. That means structuring a position so that no matter where the stock moves, we can make a profit. Let me show you what I mean. Here's the position I built this time. Let's take a look. If the stock rises to $100, we could earn $9,000. If the stock rises to $140, we could earn as much as $47,000. If the stock falls to $50, we could still earn $20,000. As we can see, with potential earnings of up to $70,000, our losses are around $300–400, which are relatively insignificant. But again, this strategy is very complex. It involves different expiration dates, varying terms, selling calls, and buying options. I wouldn't recommend opening such a position lightly. I'm just showing you how you can structure positions. However, I'm not going to open this strategy myself. I simply demonstrated what can be done. This strategy requires active management, buying and selling options, so it's complicated to manage. But the key thing you need to understand is the logic behind this approach. For me, it doesn't really matter where the stock goes, whether it rises or falls. With proper management, you can make a profit. In any case, that's the secret. Now let's take a look at Alibaba from a longer-term perspective. As we can see, the stock is trading at levels last seen in 2014. Back then, Alibaba's earnings were much lower, about $4 billion per quarter. Now it's earning $33 billion. So in fact, the company has grown almost tenfold. Yes, if we look at 2014, the company earned just $3 billion, but now it's making $33 billion. This means the company has grown tenfold in 10 years, yet the stock hasn't moved much. Again, there are political risks, and the fact that the company has a very complex listing structure, essentially a placeholder through another company, doesn't help. However, Alibaba has started paying dividends, which is a very positive development. Holding the stock for several years and receiving dividends is far more rewarding than just sitting on the stock without any returns. But again, if you are a long-term investor and believe in the company, I'm confident that sooner or later, we will see new all-time highs. The question of when is difficult to answer, especially if no political events or other factors negatively impact the company. If such risks don't materialize, then sooner or later, based on the reports, the company is bound to grow. Looking at all the financial metrics, we can see that the company is truly profitable and has a lot of potential. However, the key is to keep no more than 10% of your portfolio in this company. Why? Because if something happens, you won't be too worried and can afford to hold on for 1, 2, or 3 more years just waiting. That's the secret. Buy and forget about it for a decade. If you have the patience, you will certainly make a profit. If the company reaches new all-time highs, that's a 250% return, which is very significant. I also recommend you watch my previous video on NEO stocks, where I discussed many important points. If you have any questions, feel free to leave them in the comments. Good luck to everyone.